This is Alan Bush with the Daily Financial Forecast for Thursday, April 28th. Starting out with the stock index futures, we did see some good gains yesterday afternoon. This after the Fed released their statement, which was, I would say, on the neutral side compared to with what some analysts were predicting a bit more of a hawkish statement. So stock indices putting in a good performance yesterday. However, today we are seeing some pressure developing. This on news that the Bank of Japan failed to add more stimulus to their economy at their policy meeting that concluded today. Feeling was that they would be more accommodative, which they were not. So this was a big surprise that affected all of the financial markets globally, including the stock index futures here in the U.S. However, we do feel that the economy is likely to hold up relatively well, even though we did have the GDP report today coming in a bit on the weak side. First quarter GDP up 0.5% compared to the estimate of up 0.7%. But we do feel that the Fed will be very slow to raise interest rates, and that will underpin stock index futures and take all of the major indices to new highs for the year. So continue to buy stock index futures on weakness. Now, moving over to the currencies, the dollar index under some pressure today on the belief that the Fed will be slow to raise rates. Also, we had the euro currency trading higher after a series of economic numbers in the Eurozone coming in better than expected. Also, the pound a little bit better, but we are at the top of the range or even a little bit above the top with some strength over the last few days. And I think the pound is very vulnerable at these higher levels to any change in the polls turning to a no vote as far as the UK referendum is concerned to leave the European Union. So anything leaning toward a leave vote will be bearish the pound. And so I think the pound can probably come under some pressure from here. Also the yen trading sharply higher, in fact, having its single best day advance since 2010. As we mentioned, with the Bank of Japan refraining from adding more stimulus, which had been expected. And the commodity currencies, the Canadian dollar and the Australian dollar, both higher with energy prices firming. Now, moving over to the interest rate futures markets, we did see good gains yesterday with the Fed statement coming in neutral as opposed to the consensus view that it would be a bit on the hawkish side. However, a more mixed trade today. Also, we are getting information now that the probability of a rate increase at the June meeting now falling to only 19%. Yesterday it was 23%. Also, as far as the precious metals and industrial commodity markets, we feel that all of these markets have turned a corner, and any bearish news in any of these markets should be viewed as a buying opportunity, and that it would include the gold, silver, platinum, copper, crude oil. All of these markets have bottomed with what we're seeing, which also appears to coincide with what we're calling a recovery, or at least a bottom in the Chinese economy. So continue to trade precious metals, industrial products, all from the long side. And I think this is a trend that will probably last well through this year and probably well into next year. So good trading, everyone. And once again, remember, these are my opinions alone and are not the opinions of ADMIS or Archer Daniels Midland.
Orders buying 1 June Mexican peso 65.05 on a limit, good till canceled.